Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Wednesday, June 15th. Futures are showing that U.S. stocks may give back some of yesterday's gains as investors digest readings of consumer prices and manufacturing in the New York area. We'll bring you all that data after the opening bell. But the focus of traders around the world is back on Europe. At a meeting in Brussels yesterday, Eurozone officials failed to make progress on a new bailout package for Greece. Some officials, like Germany's finance minister, want to make private creditors contribute to Greece's second rescue in 2 years. But ECB President Jean-Claude Trichet has spoken out against that plan, saying any form of debt restructuring could be perceived by the markets and the ratings agencies as a default. Meanwhile, Greek workers are staging a national strike, protesting a new wave of austerity measures required for the country to continue receiving aid from the European Union and International Monetary Fund.
Amid this uncertain backdrop, the cost of insuring Greek debt against default is rising to an all-time high, and European financial stocks are dragging the overall markets lower as investors worry about the risk of contagion. Moody's Investor Service said it may downgrade French banks because of their exposure to Greece's debt-stricken economy. And the French government responded by saying that the German banking sector is actually more exposed. Concerns about the sovereign debt crisis are also driving the euro lower against the dollar today. The dollar is also stronger against the other major currencies, and that strength is weighing on commodities a bit. Gold is now back below $1,520 an ounce, and oil prices are dropping to around $99 a barrel.
Investors are also digesting comments from Federal Reserve Chairman Ben Bernanke. At a speech yesterday, he urged Congress and the White House to work together in good faith to solve the nation's budget crisis. But he warned Republicans that they shouldn't use the debt ceiling as a tool to achieve their goals. Republicans are demanding deep spending cuts in exchange for the yes votes on raising the nation's $14.3 trillion borrowing limit. But Bernanke said that failing to raise the debt ceiling would be self-defeating if the objective is to chart a course toward a better fiscal situation. He believes it would cause severe disruptions in the financial markets by shaking the confidence of investors in the country's willingness to pay its bills. President Obama has warned that the debt ceiling must be raised before August 2nd to stave off a government default.
On the corporate front, a big internet stock is debuting on Wall Street today. Pandora Media priced its initial public offering at $16 a share, well above the $10 to $12 range the company recently projected. In all, Pandora sold nearly 15 million shares in the IPO, signaling strong investor demand for the internet radio company. Pandora will trade on the New York Stock Exchange under the ticker symbol P. We're also keeping an eye on shares of Nokia today. They're falling back to earth, losing nearly 5% in pre-market trading and more than 4% in Helsinki. The declines follow a big jump yesterday after the Finnish mobile phone giant agreed to settle all patent litigation with Apple. Apple is also likely to open lower, following a nearly 2% gain yesterday. That's the latest from Weiss Research. We'll be back after the opening bell with all the economic data and market reaction.